Good morning, everyone, and welcome to the PivotBoss pre-market video for Wednesday, January 17th, 2024. I am Frank Ochoa, aka PivotBoss. Happy hump day, everyone. Here's a look at the daily time frame of the ES. Right now, range bound still. Narrow range over the last several days here inside a wider narrow range that has developed over the last month or so. If you look at, say, the 60-minute time frame, something like this, you have a bit of a rounded developing here in the ES. A failure at about 47.70 here could open up a retest back toward 4700 up ahead. Overall, this market continues to be mostly compressed. We do have pre-market economic data today, Beige Book later on this afternoon, that could move the dial a bit. But for the most part, this market remains range bound here, and any push, even through previous highs, could open up an opportunity for bears to defend, swing it back to the lows. If price were to drop down to these lows, it could be an opportunity for bulls to bring it back up. So right now, this market still remains mostly range bound. We're kind of right at the center of the range at the moment after spending multiple days near the upper half of the range. Failure at about 47.70 opens up the lower half of the range. Until then, we're still kind of range bound here as we head into today's session here. Overall, this market continues to compress near the highs of the previous quarter's range, and typically speaking, that again either leads to compression or some pullback. We've seen a little bit of both, mostly compression. A failure to hold the previous month's midpoint could open up a broader pullback that leads to a gap fill below, perhaps a test at the previous month's low right here. So again, right now mostly compressed here as this thing continues to build energy for the next key move. If we take a look here at the MQ, similar price action for the MQ as well. You can see multiple days sideways here. Price again staying within a relatively narrow range, and right now we have kind of a 5-6 day narrow range at the center of that range. Overall, again, if price were to come up here and find a new high, it could be an opportunity for bears to defend and keep prices in check. When you look at the scope of the last quarter, again, very bullish quarter, and at the moment, staying in the upper half of the December range right now, in the upper half. A failure at the previous month's midpoint could open up a return back to the previous month's low and lead to a gap fill along the way. So again, right now, very narrow range of price action here. Failure at the lower edge, 16.8 is going to be the level to watch here. Failure at 16.8, you're open up a little bit more downside here. Taking a look here at crude oil, this one's down right now, down about nearly 2.5% at the moment, as this thing is breaking down through the 71 level. It is approaching support here near 70.50 or so. We've seen this thing continue to compress a bit. We've had a heavy rejection here recently at the upper end of the range. The previous session inverted down, and now we're seeing weakness here and a continuation here. But again, this compression here has been in development for a while, and we haven't really seen a full-on break out from that range yet. As we've noted before, this range has 10 to 12 points of energy easy built into it. It could have as much as 10 to 15 points of range once we do get movement going. Even if we were to break to the downside out of this range here through 70, got a big key range test at the low here at 67.70. That could be important here, and a rejection here could bring prices back up. Typically speaking, we have bullish seasonality for this time of the year, but right now it has been about as flatlined as it gets here, with a real lack of directional conviction at the moment. We still have overall downtrending price action for crude oil, and again, if we are to break to the downside here, this could open up a big time test at the 64 market structure down below. 64s would be a huge opportunity for bulls to defend and perhaps reject. 64s are right here. That's the previous year's low right there. And again, that is the 64 market structure from the 74 at the moment. Not able to get above 74. Perhaps 64 could be next. But again, keeping an eye on 70 to see if we truly break down from this range, or do we just pop right back up and continue to trade within the range. We'll see with crude oil up ahead. If we take a look at gold, here's gold right now, just down marginally at the moment. This one's also range bound for the most part. after developing a wide key range. For the most part, downtrending here. It's rejected prices at 2080, 2100, and prices way beyond that. Still kind of trending downward a little bit, but still sideways within the range. So again, 2020 right here has been support so far. 2029, that area has been defended. Through this zone opens up a big test in the 1980s, and that's going to be something to keep an eye on. So this market continued to mostly build some energy here. We have the uptrend that's still in play. A failure at 2000 could start to open up quite a bit of downside here. But for the most part, still stuck in the center of the range with a modest downtrend here for gold. Today, since we are still in a range-bound kind of market, keep an eye on the previous session's low. A recovery of that low could open up a return back to the previous session's midpoint up above. All right, taking a look here at the YM. The YM right now, again, showing a little bit of weakness here today. Has been extremely narrow throughout the year thus far. This is the new low for the year right here this morning, 37,365. That's just below the previous session's lows here. You can see how often price has been rejected at the previous year's close. We're still really on that 37.4 support level. You can see the LVN start right here, so you have that kind of ledge that's providing support here for the YM, but a failure at 37.4, and you start to open up a pathway to trade back through this thin part of the profile and perhaps the gap fill down below. The gap fill is going to be around 36.3. 36.3 could be ahead if a failure at 37.4 starts to materialize. Again, overall, this market has been extremely narrow up here. Can't really do business in such a narrow range for too long, so you have to kind of widen the range. Sometimes you drop down, come back up, pull back, and now you've widened the range and you can stay in that range a little longer. So we don't necessarily have to break down and drop straight away right away. This thing could continue to build out a bit here. 37.4 is going to continue to be the big level here for the YM. All right, that is it for now. We'll see how this plays out the rest of the session. Good luck, trade well, and I'll see you in the trading room. Take care.